As promised, let's focus on the insurance sector. GIC Re, that's a stock on our radar. Remember, it's rallied close to around 50% in 15 days. My colleague Yash Jain caught up with Mr. Narayan, the chairman and managing director of the company, to decode what has changed in the business and what's the outlook as well, and which segments could be the growth drivers. Let's listen in to what he had to say.
We did have a kind of interaction with some analysts and some investors in the last month to see what kind of appetite is there for our stock. And we realized that our company is slowly getting recognized, people are slowly understanding our business, and maybe that is bringing the operating on the stock. We have performed well last year. We ended up doing extremely well on the numbers. Plus we got our credit rating upgrade from AM Best, which is very gratifying because this helps us in getting good quality international business.
Government absolutely holds about 85%. They have to dilute about 10% to reach that minimum public shareholding. What is your thought? When does that happen in terms of communication with the government? And as you say, investors, understanding the stock, taking interest in the stock, does that become a compelling reason that sooner than later we'll have an OFS coming into the market?
Well, I think an OFS has to happen. Like you said, government needs to ensure that there is a 25% shareholding in the hands of the retail public. So currently we are at 85 as far as the government is concerned. They need to bring it down by 10%. When that will happen is a call I guess the government will take, depending on whether there is enough investor appetite for our stock and whether the prices justify that.
For the next 2 to 3 years, if the street has to look out for an outlining target in terms of business, what would that be?
We would typically grow maybe 10% year on year. Okay. Again, another big factor would be our, the credit rating that we have, which allows us to look at better international businesses. As our credit rating improves, I think we would look for better international business to write. That is where the growth would happen. India as a market, if you see, the insurance market typically grows year on at 15 to 20%, which is amazing. And the regulator has also been pushing to ensure that penetration levels in the market go up. So, just by being in India, our top line will definitely grow.
I want to understand from you, what growth in net earned premium do you expect for the second half of this year? And then from FY25 onwards, where does this number stabilize?
So yes, what would happen is maybe for the next half year, we would expect a growth of 5%. The reasoning is very simple. As we start the growth process in the company, it will typically take about 18 to 24 months for those results to show in our book. Because being a reinsurance company, we sit that much behind an insurance company, and whatever we do, it comes later in our books. Secondly, a lot of our business gets decided during the treaty renewal dates. So for the international markets, it is normally 1st of Jan, and for Indian market, it is 1st of April. So normally what gets decided there, it comes into our books in about 18 to 24 months. So basically those growth that we are talking about based on the capital that we have will start happening from FY25 on.
In FY24, what kind of increase do you see in your investment income over the previous year?
So basically we have two different kinds of income. One is, if you see from my entire investment book, about 72% is fixed income, right? Because that is the way most insurance and reinsurance companies do. And on a book value basis, about 17 to 18% of my book is equity, right? So the business or the interest that comes from the fixed income thing, that kind of remains stable. This year it has been slightly better because the market has been improving. Now what really changes is the earnings that we get from the equity side. So that depends on how we look at the market, whether we feel that the market has gone up to a certain level for us to sell and book those profits. Again, it could depend on certain sectors which have suddenly run up, and we feel that there is an opportunity to sell at this stage and buy at a later stage. So those decisions will take depending on how the market performs in the coming say 3 or 4 months. But more or less our investment we try to maintain as risk-free as possible.
Correct.
Because whatever risks we need, we already take it on our business. So our investment book is normally kept very, very safe. The investment income this year, the growth would be about anywhere between 7 to 8% as I see it.
Which business segments do you think were the main culprits which sort of brought majority of these losses, and what's the strategy as far as finding or improving those loss ratios are concerned in these large business segments?
So basically for this quarter, what happened was, so we had written a piece of business in the US, which was doing both marine and motor. When we wrote it, it was profitable, but over a period of time now, especially post-COVID, we understood that it is not working for us. So that is a business that we are not writing anymore. It is currently in runoff. So what happened was a few losses came in this time. Obviously, there was no premium because we are not writing that business anymore. The losses came in, which is where the loss ratios have gone up. Secondly, what we have done is in the Indian business, you would realize that in the month of October, there was a catastrophic event in the state of Sikkim.
Correct.
Right? And even though it happened in October, and what we have done is basically closed our accounts up to September. As a matter of utmost prudence, we have actually provided for it.
The IBNR claims.
The IBNR claims, because there have been no results which have come in from there, and nobody has given any kind of estimates. But purely as a matter of utmost prudence, we have added IBNR close to 650 crores, which has again added possibly about 4 to 5% on our underwriting, on our combined ratios.
Where do you see the combined ratio at the end of the second half? And speaking about the target that you had set out, that we'll get to the number of 100 as soon as possible.
True.
As we stand today, how soon do you see yourself reaching at that 100 number?
So one is for the current year, we hope to be where we were last year, which is close to 109.
Okay.
I think hopefully we should reach that. Second is on the magic number of 100 to reach that. See, the point is, it is not something which is going to be attainable quickly over a period of year or two. Simply because you have to understand the market. GIC writes 70% in the Indian market, and the Indian market, the insurance market, runs at a combined of 120. So when they are running at 120 and I am writing a major portion from this market,
correct,
it will be difficult for me to do that.
So about 109 in FY24. FY25, where do you see it going? What is the path that you expect
We are
it to
looking
move
at
on?
improvement. We are looking at improvement. So it will happen that maybe year on year we will slowly improve by a percentage each.
Okay, well, things are happening. GIC Re, the stock is up about 6%. So the surge continues. So almost 60% in the last 16 odd trading sessions. But the other one is Tata Technologies, which is